Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you're enjoying the podcast, do me a favor and leave us a 5-star rating and review. That way, more people can find the podcast and get the same excellent content that you're getting on a weekly basis. Now, if you're interested in multifamily investing, I got something you should check out. We have a free sample deal package available on our website. Just go to kasmancapital.com/sample deal. You will get a chance to take a look at that sample deal package, as well as join our mailing list for exclusive tips on marketing and multifamily, as well as exclusive investment opportunities if you qualify. Again, that's kasmancapital.com/sample deal. Now, today we're going to be talking to Ashley Wilson. Ashley is the co-founder of Bar Down Investments and has almost 10 years of real estate experience. Specifically, Ashley has been involved in over $30 million of multifamily properties consisting of over 450 units in both Texas and Ohio. Along with her father, Ashley has a very successful high-end flipping business in Pennsylvania called How's It Look, which handles several $1 million in transactions annually. Let's welcome to the show, Ashley Wilson.
Thank you for having me.
Ashley, thank you for coming on. We had a chance to meet each other and talk on the same panel at the Mid-Atlantic Real Estate Investor Summit by our friend Dave Van Horn. And I was really impressed with you and kind of the knowledge that you shared on investing. But why don't we start with you just maybe taking 30 seconds and filling in some of the gaps of who you are and what you've been working on.
Absolutely. So, hi, everyone. My name is Ashley Wilson, and I started real estate about 10 years ago, investing in real estate. And I didn't realize at the time that it would lead me to where I am today, but I'm very fortunate that it has. It's completely changed my lifestyle. I live my life on my own terms, and I really enjoy that aspect of what real estate investing can provide for you. I started 10 years ago with a single rental property. I started with short-term rentals, and then it moved into long-term rentals and flipping and multifamily and a few things along the way. So with respect to multifamily, I've actually only been in multifamily for less than 2 years. However, I've amassed such a profound amount of information because there are such great resources in the multifamily space, and there are great people to work with that I feel like I really have learned more in this past year and a half or so than I've learned combined through my 10 years of investing in real estate.
Well, you have such a robust background in real estate. So you're talking about over the last 10 years, from flipping houses to short-term rentals to, single family rentals to now multifamily. What was it, on your journey that made you decide to kind of transition from everything else that you were doing and spend more of your time focusing on multifamily?
That's a great question. I think that I have always been a very flexible person. So I know that there's definitely a difference between someone who can't stay focused, that it's, the shiny object syndrome. And then there are people who are very rigid and they just want to stay their lane. And I'm kind of a mix of the two. So I am very familiar with what my strengths are, and I also know what my weaknesses are. I don't think that I'm a shiny object type person, but what I do like to do is I like to continue to educate myself, and I look at both things that are intrinsic and as well as extrinsic, like market conditions and what is most advantageous in terms of my pathway coupled with my skill set. So when we first started, my husband and I first started investing in real estate and purchased our first short-term rental property, it fit very nicely into where we were in life, and we bought basically a turnkey property. So in terms of the work we wanted to put into it, our knowledge about maybe doing a full gut rehab. For me personally, it wasn't there yet, even though I had grown up with a general contractor as my father. So if you look at that progression and then how I moved over into flipping, it coincided with the economy and the rebuilding after 2008's crash. So it really lent itself well to be a very advantageous time to move into that sector of real estate. Furthermore, it also coincided with my dad, who was getting out of the physical part of doing construction and wanted to manage projects. So it just was a perfect marriage of both my skill set and my father's skill set and the economy. Now moving forward, and we look where the economy is at today, and we look at flipping it in terms of deal sourcing is really drying up because we haven't had a recession in so long. It's getting harder to find these properties, specifically for us, because we focus on high-end properties as opposed to, you know, the 200, 300,000 price point. So we focus on these higher end homes, and those homes are getting harder and harder to find. So it makes sense to kind of have another pathway going on simultaneously. So we have slowed down a bit on the flipping side, but we've parlayed into multifamily to provide a little bit more diversity as to what we're investing in.
So let's talk about some of that flipping experience, right? Because I will never call myself a flipper, but I did flip a couple properties, and I did not have great success. And I learned my lessons, and we made adjustments to our processes and protocols. With you having a father with a GC background, I'm sure that gave you kind of a leg up going into the construction projects and understanding kind of how to underwrite the deals, how to analyze the deals, how to manage those projects. Talk to me a little bit about some of the things you learned kind of managing the flips and the rehabs.
In my opinion, there are three components to every investment. So you're talking capital, you're talking your team, and you're talking sourcing. So the actual properties, the capital that you need to purchase the property and do the rehab, and then you're talking about the team, the people who are doing the work. For us, on our first project, we were fortunate that we had all three. We had a trifecta. So it was really advantageous for us to get into it because we had the team, we had resources through my father's connections. He had his own business for over 45 years. So it was very easy for us. And we didn't have that fear factor that a lot of people going into flipping have, where they're concerned about cost estimating and also to who is on the up and up in terms of your general contractor. With respect to the capital, we did not start in high-end flipping. We started with a lower price point home. And fortunately, through the means of my husband and I and being more frugal in how we run and operate our finances, we had saved enough money to be able to purchase the property and do the rehab in cash, which I know a lot of people don't have, but there are a lot of other books out there on how you can invest with no money down. So that should not be a rate limiter for someone, just throwing that out there. And then the third component is talking about the sourcing. And as I mentioned previously, in 2008, we had the recession. So there's a lot of inventory, even 5-6 years ago, that we could pick from. In fact, the first house we offered on, we got. Now, if I look at my conversion ratio today, that is not even close to feasible. So, we were very fortunate when we first got started. Now, there are a lot of things that transitioned. I mean, to your point, not everyone is successful in flipping. And there are a lot of statistics that show that over 90% of flips are done by first-time flippers. And it's over 85% or 90%, I can't remember the exact statistic, lose money in their first flip. So flipping is not something that comes without risk. Fortunately, we were in a good situation because we had a lot of the framework that you need to get into flipping. My dad had partnered with flippers before. We just had never worked together. Mm-hmm. So when you take my background, where I was in project management previously, I worked for large pharmaceutical companies and I ran global trials. I was actually really good at managing from a distance, which was advantageous because I was living in Europe at the time when I partnered with my father. So I would contact all the contractors. I would order the materials. I would literally do everything. I would find the houses. I would tour the houses with my dad. We leveraged technology with FaceTime. There are a lot of things you can do remotely that a lot of people don't even think about. But if you're forced into a situation, you'll find a solution. And that was the situation I found myself in. So for my dad, what I was trying to do is whatever made his job easier so he could focus on the day-to-day. And at the time, he used to call it adult daycare. He just made sure that the contractors would show up and we would keep moving the needle in terms of getting the project completed. So it was definitely a very interesting learning experience from multiple dynamics. One, from learning our first flip was a full gut rehab. I mean, we spent over $100,000 on the rehab. It took a year from acquisition to sale because it was a 9.5-month renovation.
Wow.
And we made a good profit if you look at it without the time variable. And that's where I come into play versus my father. So we had a debrief meeting because I'm very organized and structured and I treat everything like a business. And at the meeting, I said to my Dad, this is terrible. We cannot survive off of this. And he was so disappointed, and he was so, he just didn't want to work with me after that conversation, to be honest with you. But when I turned it on him and I said, Dad, we made $66,000 on this property, which is fantastic, but can you live off of $33,000 a year? Because we split the profits 50-50. And he said no. And I go, well, there's your answer right there. That's why this is not successful. The house, successful. The business, failure. See the difference? And I tried to, he didn't look at it like that. That's why we're a good partnership, because I look at things that way, but he looks at things other ways that I don't see either. So we have a really good balance together. And I think that's something, whether it's flipping or multifamily or anything, partnerships are critical to the success of the project. You can have a bad project, but you can have good partners, and that makes the project successful. But if you have a good project, a good property, and it's set to do well, and you have a bad team, that is going to be a failure. I can guarantee that it'll be a failure, whether it's because the returns weren't realized, maximized, or if the returns weren't realized, period. It really comes down to the team.
No, I mean, just to echo what you said, the team is so critical. I mean, when I mentioned our flip projects, that's exactly what happened. I love what your dad said as far as the adult daycare, because that's exactly what was missing. My wife and I partnered on the deal with another contractor, and that was his role, was to make sure the crew was there. Well, guess what? No one was supervising that piece. So when we would come by and take a look and see the progress, it wasn't moving as quickly as it needed to be. We ultimately ended up having to part ways with him and took over the project. But at that point, we had to invest way more capital to get the deal done and finish things up. But what you're saying as far as the partnership is such a critical component of any flip project, mainly because with flips in particular, you're kind of racing against the clock. Every day that you spend, I mean, if you pay all cash, it's a little bit easier. But if you have kind of a hard money lender involved, and even on a cash deal, you're still racing against the clock because your returns dwindle every single day. So I know that, you learned a lot from your standpoint on the construction project management. Your father already brought kind of his experience. And I know you work with your husband as well. You mentioned, at least on that first deal. Talk to me a little bit more about kind of the dynamic and the partnerships as you guys work together today.
Yeah. So on the flipping side, I still work with my father on day to day, and that partnership, that's, a well-oiled machine. I mean, is every day rainbows and butterflies? No. But we are really good. And I don't know if a lot of people could do this, but my dad and I, we can literally yell at each other and then be like, okay, love you, bye. And then pick up the phone the next time and be like, oh, hey, what are we doing tomorrow? Are you coming to see the grandkids? And everything is fine. And I'm really good at compartmentalizing that. I do not carry over. It never carries over for me. And I think that's just, I don't know why I'm good at that, but I'm good at that for some reason. And my dad's good at it, so it works. With my husband and I think it's a little bit harder because I try to still compartmentalize it, and he doesn't work that way. And he's very transparent that he doesn't work that way. So like, he wants to figure everything out, which is great. Like, I need to work on, I'm sure that's a skill set I need to work on. So with my husband and I, it's interesting. So on the flipping side, he actually has his license and he does all of our transactions. He's the realtor on the transaction for both our buying and selling. And he only does our transactions. He's not a realtor for retail customers. So it's just a one-off. On the multifamily side, we work completely differently. He is leading our underwriting team, and he, just to kind of give a background with him, he was a physics major. He was supposed to go into engineering. So that kind of fits that mindset and the type of personality that falls eventually in multifamily into the underwriting side and the analytical side. He does a lot of our market research. So it really fits him perfectly in terms of his mindset. With respect to the overall organization, he still looks at me to steer the ship. So I am pretty much the CEO without that official title, of our company. So I'm making the decisions not only on the day-to-day operations and construction management, but also too on our pathway forward as an organization, as where we're going to go. But it does have its challenges when you're all constantly working with family. We 90% of the time we're talking about work, and I know that doesn't work with a lot of people, but for us it works. We enjoy talking about it. Let's be honest, we enjoy making money. And we enjoy the lifestyle we live. We enjoy being able to be there for our children any day. We enjoy the fact that we can make our own schedule. If we want to go to the beach today and pull our kids out of school, we're just going to go do it. Yeah. We don't have to answer to anyone. And that's really what excites us. I personally like the real estate component too, but to me, I love the lifestyle more. And that really drives me. I always tell people when I was younger, everyone was like, oh, what did you want to be? And as a little kid, people would say, oh, I want to be a doctor. I want to be a vet. And my parents were always there for me at all of our sporting events. So for me, the only thing that I knew I wanted to do was I wanted to be there for my family. Whatever career that ended up being, that was the most important to me. So when I started to go down the pharmaceutical path and I was fast tracked and I kept getting promoted and I was doing really well because I'm just a naturally driven, hardworking person, it was great, but that lifestyle did not match with what my ultimate goal was. So it was really easy for me to exit after doing that for years because I could see that this was not the path that was going to lead me to, even though I was like, I want to be the CEO one day of this company. Yeah. When I stepped back and looked at it, I was like, okay, well, if I'm the CEO of GlaxoSmithKline, that means that's my family. That, I'm giving up my personal family for a corporation family. And that's not something I wanted to do.
No, I love that. And I think so many of our listeners can relate to that because, it's one thing to climb the corporate ladder and it's another thing to understand what success really looks like for you. And it sounds like you define success as time with your family. And once you had to step back and reconcile your vision of success with the actual lifestyle that you were pursuing, you had to make some adjustments and kind of transition a little bit outside of the corporate world, focus more on, creating kind of other income streams in real estate to really take advantage of that. Let's talk, and I want to recap something else you said too. We were talking about family and working with family, and a lot of what you were saying just kind of hit home with me because I also work with my wife. And when you talked about compartmentalizing things, that's something that we work on because for me, something in the business is something in the business. The moment we shut laptops, I'm like, hey, babe, what do you want to do for dinner? And she's still looking at me with the evil eyes, like I can't believe you told me I wasn't working hard enough. So we go through those kind of things too. So it's good to hear that. It's kind of a common thing. But I think ultimately, anytime you're in a partnership, especially with loved ones, you have to be sensitive and mindful of how they operate, the way they take information, and just have open dialogue. I mean, that's something we certainly do is we just sit down and talk about it. Hey, I didn't like when you said this to me. It's like, okay, I'm sorry. I didn't mean it like that. But, sometimes when we're working, we're just trying to get stuff done. I can't find the right words every single time, but
I
we try
know.
to make sure you have that open dialogue with each other to make sure you're building not just, the life you want to live, but that business partnership as well. And we've also had to step back and say, hey, listen, it's not you, but I need more from this piece of the business. So whether that is you or we find someone else to outsource some of this to, but I need this thing done and I don't really care who does it. I just need to get it done. So we've had to step back as well and say, listen, it doesn't have to be just you and I doing everything. There's a lot of stuff when it comes to multifamily investing. So we've brought on people in our team to kind of help with that regard too. So I want to talk a little bit more about kind of your construction background and transition that into kind of the multifamily landscape and how that really is helping you when it comes to investing in multifamily properties, specifically managing the construction process in these deals.
Yeah. So as I mentioned before, I grew up with my father being a GC. So he would take me to the job site. When we would have Veterans Day and school would be closed, we'd be at the job site with my dad. And from that, my brother actually grew up working for my dad. I grew up working for my mom once we were able to start working. But in terms of just being around different construction sites. And my dad has worked on everything from Section 8 to multifamily to commercial, everything in between, multi-million-dollar mansions, obviously. So it gave me a lot of exposure very early, but then working with my mom, who is in the management side, that gave me exposure on the management side. And then ultimately my career in pharmaceuticals furthered my skill set within management, especially managing from afar. So with respect to how that led to the multifamily component, my dad and I, when we started, when I first started investing in real estate, we would do, a small project here or there, and I would help out with my dad. And we also grew up in a fixer-upper house until I was 18. So, my dad did everything, like literally built that house all over again because it was from the late 1800s, early 1900s. I can't remember the exact year. Anyway, long story short is that I just got exposed to different projects here and there as kind of a one-off. And then when we purchased the first house, when we purchased it, I was living abroad, but when I would come home, I would work on the house with my dad. Everything. I mean, literally, my dad and I did everything with this house, and except the mechanicals that you need, like a licensed electrician, for example, or plumber, HVAC. But anyway, I just learned through the process of actually doing. And I'm a type of person that I don't like when someone says to me, this is what we're doing because this is how it's always been done. And this is the process without really understanding all the components. So I'm a type of person that I need to work in the trenches. And then as soon as I get it, I want out. So I pull myself out. So I need to understand the day-to-day. I need to understand the entire process of how to flip a house from start to finish, all the different components of a full gut rehab, understand the scheduling, understand how all the pieces fit together. And then once I get it, I get it. I don't want to keep being in that cycle, and I don't want to do that continually. So my dad is an incredible teacher. So that works really well because he literally, anytime I had a question, he would explain everything to me so I could understand different mechanical systems, how the scheduling works, where you can, if you're behind on a project, where you can have things overlap and have things done in parallel, and how to take, how to streamline the actual schedule of renovation. To that point, I mentioned our first house took 9.5 months. A year to date afterwards, we did the exact same type of renovation on a larger house, and it took us 9.5 weeks. So once I figured out, my dad telling me, okay, this is the whole process, I worked with my dad and I said, okay, well, this is the new schedule we're going to do. We literally outlined the schedule, and I was like, okay, we're going to have this person here. You told me that this person can overlap here so we can save a week here, and I figured it all out. And that's the way I like to work. And once I have it figured out, then I want to go to the next level and the next level. And I basically want to replace myself with someone who can do what I've already learned. So I can keep going up, and then I replace someone underneath wherever I was at before, but I need to understand every step of the process. That's just the way my mind thinks. To that point, going into multifamily, first of all, I already had the skill set on how to work from afar. I don't need to be at a property every single day. I don't need to live in Texas to have a value add going on in Texas, because I understand A, how construction works, and I understand B, how to manage it from afar. I understand how to keep the project on track. I understand how to keep it on budget, and I understand how to verify that it's getting done, which is important. And also to I understand how to vet these contractors. I mean, it's not a flawless system. You're going to have problems regardless, but through the education of my father and just my natural mindset of always wanting to learn, I don't, just telling me, okay, we're going to, I don't even, like, we're going to renovate this unit and it's going to take us 10 days. And we're just going to replace the flooring and do some light fixtures. To me, I'm like, why is it taking 10 days? That doesn't take 10 days. Especially, if we're going to do a vinyl rollout, you can get that done in a day with that much square footage. We're not doing steps. It's a single floor unit. So it's an easy install. It's, this subfloor is in good condition. That's not 10 days. Why is it 10 days? Well, okay, well, there was an issue here. There's an issue there. Okay. I want to know that. And it's not about micromanaging. It's understanding and building the trust factor at the beginning with your on-site team. That's the only way managing from afar works. So once you build that trust factor with your team, you can let off a little bit. There was this, I wish I could think of the name of the book right now, but years ago, I gave a seminar to all these managers on delegation and how to manage work. And it had 4 quadrants. And it basically said that the way you manage is based on the skill set of the people you are managing. So if you have someone who is new to the organization, you need to be hands-on and literally micromanaging these people. And then you need to recognize, though, when they get to the next level and they're more comfortable, and you need to step off a little bit and you need to just provide more support, but not micromanage them, but still stay on top. Then the third step is you're providing the support because they're now getting to like an advanced level. So you're providing support, but you're no longer micromanaging them. There's like 2 levels of micromanagement, but you're no longer micromanaging them. You're providing support. And the 4th step is they're an expert. You're just delegating. You are not hands-on at all. So to me, and going back to that, like adult daycare, whether it be on multifamily or single family, is when you first start off with someone, especially if you don't know their skill set, especially if they don't have a track record of flipping houses or your track record working together, you always start at that first step. You always start micromanaging. But if you see right away, well, they don't like this, they're past this, you got to switch your behavior, switch your management style very quickly and figure out where they're at and where you're at in terms of what support you need to give them. So on the construction side, that's the approach that I take. There are certain contractors where you need to be on them like, whatever that saying is, like white on rice. Like you're just constantly checking in with them and making sure that they're getting the job done and things are moving smoothly and they're taking accountability for the materials in the unit and, just like really, really detail oriented. And then we have other people where it's like, okay, we're going to drop ship the materials to you and we need these units by, 2 weeks from now. And you give them 20 units and they're like, okay. And they just deliver them to you.
So Ashley, how do you talk about vetting contractors and understanding how to manage them, whether they need to be micromanaged or more so just delegating? How do you vet the contractors? What for our listeners who are looking to implement some of these strategies, right? What can they do to better vet contractors and then also make some determinations about whether or not they need to stay on top of them with every single thing or kind of ease off a little bit and maybe just more of that delegation role?
My number one tip is, and I'll just ask this question because most people don't think of it like this, but this is the way I think, is how do you find a good drywall guy? How would you find a good drywall guy? The way you would find a good drywall guy is you ask the painter. Because if the drywall guy has done his job correctly, it makes the painter's job easier. Because the walls are level, they're taped and mudded correctly, they're prepped correctly, and it makes the painter's job easier. Furthermore, if the drywall guys are delayed, then the painters are delayed. So to me, it's that whole concept that we throw around in real estate and we don't even, translate it to the construction side, but it's applicable in life, which is rock stars know rock stars, and at the end of the day, a good painter knows a good drywall guy. A good drywall guy knows a good framer. And you have to know the whole process. This is what I'm talking about. You have to understand the details of the process, because if you understand the process, you ask the guy who follows the guy before, or the girl, guy or girl. But the point is that whoever is following, if their job is easier, it's all because the person before made it easier for them. So you really, think of all the people you need to do a renovation. All you really need to do is find one good person, and it snowballs from there. So that's the number one tip. A lot of people say, oh, go to Home Depot at 6 a.m. Oh, just ask around other owners. A lot of owners don't know anything about construction. When you look at a lot of these multifamily projects, they don't even have someone on the general partnership who has construction knowledge experience. And that to me is crazy. That's insane. So a lot of people just outsource it to property management companies or third-party vendors. But let me tell you something. First of all, their compensation is based on the fact that, or their compensation is based on a percentage of that total construction cost. They are not motivated for the project to go quicker, because there's no incentive. Even if you build in incentives, the incentive that you build for them does not translate as if you had a member of your GP doing it, because a member of your GP would realize that the sooner that unit's rented, the sooner we can increase our NOI, the sooner we can refi or sell, the sooner the total evaluation of the property is stronger. Someone on the property management team is never going to, they can get it, but they don't get it. And if you outsource it to a third-party vendor, even property management companies, they get kickbacks for using certain vendors. They get kickbacks for certain contractors. They get kickbacks for certain vendors. So these folks that you're hiring might not be the best resources, but they're being pitched to you. And, oh, I have a crew we use this crew on another property and we can use it on this property. But I'm telling you, most property management companies are getting kickbacks. So you really need to be careful how you structure this. And that's why I'm a huge advocate for having someone with construction knowledge on your team. And I think that GPs are getting really greedy because the deals are getting harder, and they're trying to, even before that, even when the deals were, a dime a dozen, people are just greedy by nature, and they don't want to split up the GP and have someone come on for someone to manage the construction component. I actually manage construction and asset management on properties. So for me, and this isn't a pitch about like, oh, come hire me or partner with me to work with you. I'm not trying to say that. Find someone like me though. Find someone who is both an asset manager and a construction manager if you're concerned about GP equity. But at the end of the day, you should have someone who has construction knowledge on your team, because, as I said at Dave Van Horn's event, how many people have owned a house for a year that didn't need work on that house for just a year? Then you extrapolate that across 100 plus units, 3 to 5 year hold. And even if it's not a value add, you are going to have to do something to that property during that ownership. No property, even an A-class brand new construction, is not going to go without some sort of issue over 3 to 5 years. I mean, that's ridiculous to think that. So I just am a huge proponent for really building a strong, solid GP team that has all the tools, so to speak, that you could possibly need during that ownership. Not just someone who's good at communicating with investors, not just someone who's good at leading a cost segregation, not just someone who's good at leasing up a property. I mean, you need all components.
No, I love it. I mean, the construction management is a critical component to it. And it's one of those things where you can find the right market, you can find the right property, you can underwrite it beautifully, you can implement the business plan or start implementing the business plan. But if that construction goes awry and maybe some of the numbers are off, or it's taking longer to do the renovations, or things like that, it can certainly derail the project. So it's something that is really important, but we don't hear a lot of people talk about very often. So it's really good to hear you talk about the construction side of these projects, and also pointing out that, a lot of these people that we may hire to manage these, the construction, third-party property managers and other folks, they have other incentives involved as well. So you really need to understand the whole landscape of what's going on. And as an asset manager, if that's your role, you need to stay on top of them. You need to understand what the schedule is. You need to understand how long certain things should take. And if there's problems or challenges that are involved, you need to understand what those things are. So at a bare minimum, understanding the construction process, I think, is really critical. And there's somebody who can help tighten that up and really oversee all those different aspects is key. And then there are also people you can hire as consultants too. Is that correct?
Yeah, I mean, you can always hire someone as a consultant. I've been asked to consult on properties before for people when they're already kind of in the thick of it. So, there's obviously, I assisted Matt Faircloth with the property that he had, and actually 3 properties. I gave him some advice on 3 properties that he had on different components of it. So you can always ask people for help, and if that's where you're at. I mean, at the end of the day, I really think it's important to build that foundation from the start. I also, and some people may disagree with me on this, but if you have a project that is a heavier value add, I personally think that you should have someone who can do both asset and construction management. And this is the reason why. Every single day, I am looking at this market. I'm understanding what the trends are, what people are leasing, what type of units they're leasing. So I know what's advantageous for us to renovate, because if we're not renovating the entire property, it's really important that your finger is on the pulse. Are they renting 1 bedrooms? Are they renting 2 bedrooms? Are they renting 1 bedrooms with a den? Are they renting 1 bedrooms at this square footage because they like that layout better than the other layout? So we'll target things. Are they renting first floor units? Do we have all of a sudden a surge of older tenants who like first floor as opposed to going up and down steps? I mean, all of these things you really need to be on the pulse on, because typically, unless it's a property, let's say like 50% occupied, and you're going in and you're just going to renovate the entire property and then do a lease up, most of these projects are situated that you're trying to balance between the occupancy and the renovation and bumping the rents. There's a whole game you're trying to, work out, and nuances. And my opinion is that those change by season. They change by a lot of external factors that, if you're just looking at your property and executing your business plan without a pulse on the market, you can miss the whole opportunity that could come from really having a pulse on what's happening within that particular market. So I also too, I've created my own evaluation of what units we should renovate and whether they'll give us a better yield than other units, and couple that with what the market wants. So I figure out what the market wants, and then I have a bunch of units I can renovate, and they're all going to give me a certain premium. And there's different unit types within there that I know that they like. They're going to give me a certain premium, and the premiums are the flat. Like, say, for example, it's all $150 rent bumps, okay? But at the end of the day, there's a calculation between the cost of that particular renovation, the rent bumps, and the cap rate. And those are all things that I take into consideration between determining whether I renovate one unit versus another. And I think that is something that, once again, if you're in the trenches and you understand how this all works, you can kind of figure out all these nuances and yield so much better returns, even if they're incremental, because we all know in multifamily, incremental changes on day to day are massive returns on the back end. So that's something, if you can find someone who can do both your asset and construction management, to me, that's the person you want to work with.
No, I love that. Great tips there. And especially when you talk about breaking it down at the market level, understanding what's happening from a competitive standpoint. And just because you have units you can renovate doesn't mean you need to give the same quality finishes to every single unit. Some, especially if you're in a market where one bedrooms are maybe more desirable, doing that, maybe going a little higher in on the one bedroom units, maybe keeping it 2 bedrooms, more basic. So you want to really dive deep into the nuances of that particular market, the particular demands of the property and the comps out there to figure out the best game plan there. We started talking a little bit about the market. I know we talked about Texas and Ohio. Talk to me just a little bit about why those 2 markets? Where specifically are you focused on those markets, and what do you like going forward there?
Specifically with Texas and Ohio, they're 2 totally different markets. So I'm a firm believer that you should be diversified within an asset class as well. So a lot of people, they like to focus on one particular market and then they just buy everything in that market. And that's an argument to be made. I'm not trying to discount that, because you can get a lot of economies of scale by doing that method. So it becomes a lot more advantageous. So let's say, for example, that you really like this property and it's 200 units, and next door you can get a property that's say 50 or 80 units, and normally you would look at 100 units or more. All of a sudden you'll overpay for the 200 unit property because you can get this 50 to 80 unit property, and you can combine resources, and it works that way. So you're using economies of scale. You can have payroll switch over, contract services, a lot of different factors can come into play when you have larger unit counts within a given market. So I get that. Alternatively, so that to me is at like a project level, but at a personal level, in terms of a personal investor level, I like to hedge my bets. It's kind of a parallel to stocks and bonds, where stocks is a little bit more risky, bonds is a little bit more stable play, and you want to be diversified between the 2. I'll never forget when I first invested in the stock market, which, by the way, I'm no longer invested in at all. But when I first invested in the stock market, there was this whole thing relative to your age on how much you should be in stocks versus how much you should be in bonds. And it's all about the risk factor. Well, I like to look at the multifamily market, or real estate investing in general, to be honest with you. Specifically with multifamily, the great thing about multifamily is you can leverage different market cycles, and you can leverage different like rental trends within a market. So for example, like the Texas market, it's hot, it's a stock. It's really like, there's big risk, big reward kind of thing. People are overpaying. It's very, very well known in those major markets that people are overpaying for these properties. Compressed cap rates, all of these things that you're like, okay, this is exciting. It's fast paced. You have the potential to have landslide, millions and millions of dollars on the back end. This is great, blah, blah, blah. But in the same rate, all of that could fail for a lot of different reasons. A lot of things could potentially happen. And what do you have to stand on? So to me, Ohio was kind of a good balance, to the Texas market. We actually personally invested in that property passively. We are not GPing on that property, but for us, what we liked about that is that it cash flowed from day one. It was a stable property. There's not much in terms of the rent bumps, but there's a little bit, but that wasn't the play. And we looked at the market. The market was a stable market. It's, solid fundamentals in terms of the economy. So it wasn't sexy, but it also was purchased at a good rate, good cap rate, good purchase price. All the elements that a bond, if you're going to parallel that to the stock market. So that's really why we do that. That's a personal decision. Like I said, there's a business decision, a personal decision. And for us, that was a personal decision.
Well, I love it. I mean, I'm in Ohio, so I'm based in Cincinnati, and we love Ohio and the Midwest markets for a lot of the reasons you say, and I think a lot of people talk about where we're at in the cycle and is it too hot and things like that. And, one great alternative is instead of chasing, the future deals that, may come out. And, we certainly are investing in those deals as well. But we do like investing in the Midwest for that same reason, because it's more stable. It's not going to have the same ups. It's not going to have the same lows either. There's some markets out west I know people are really excited about that give me some pause, because we've seen that some of the out west markets, they really fluctuate when the economy shifts. So while you're seeing a lot of growth in population and things like that now, when the economy slowed down the last cycle, we saw those markets take a pretty massive hit. So those are the things I think that definitely make sense for people to just look at their own portfolio. If you love multifamily, it doesn't mean you have to stop and then go and invest in self-storage or something else completely different. You may just want to switch markets or switch asset classes. And I think that, your approach in saying, hey, look, maybe we'll do passive here. We'll be active on the deals where I can really control the business plan. And maybe over here, I'm looking for something that's more stabilized, something that just has good cash flow. I still get the tax benefits, but has good cash flow, solid returns, but not necessarily the huge bump or huge spike that we may see from some of the other assets. So I think that's a great strategy. It's something that we talk to investors a lot about as well. Ashley, I want to move on to our bullseye round. Are you ready?
I'm ready.
How has a failure or apparent failure set you up for later success?
Sorry, can you say that one more time? How has a failure or apparent failure set me up for later success?
That's right.
This is a good question. I feel like I have had a lot of quote unquote failures if you look at it from one perspective. But to me, I don't know, once again, if it's my mindset or just my outlook on life. I always look at things as opportunities to learn. So every single time I've had a quote unquote failure, it has pushed me to learn. I do not like being in a bad state. Like, I don't like when things are not going well. And I just figure out a way to turn it around and take a situation and really try to exploit that situation in a positive. So whether that's learning something to make me better prepared to handle a similar situation in the future, or if that is a situation to highlight. I'll give just a real quick example of a recent example. We purchased a property where 2 people had lived in it. Those were the only homeowners, and it was built in the mid 80s. And it has a septic system. And we assumed that the septic system would be fine because it's a 4-bedroom house, but only husband and wife were living in there. So, and no one else had ever lived on the house except these 2 people. So the septic system, in terms of like the volume that had gone through the septic system, should be perfectly adequate. So when we purchased homes, we purchased them without any contingencies. So we didn't do a septic inspection. We got the property under contract to sell after we had renovated it. And they did a septic inspection, and come to find out that when they installed the septic system, they pitched the pipe incorrectly. So the water was sitting still instead of it flushing through and going to the drainage field. The problem with that is Pennsylvania state law states that if a septic system fails, any part of the system fails, the entire system has to be replaced. So this was a huge learning example. I mean, I already knew that part of it, but it was a huge learning opportunity for us, because it was like, okay, really what happened was when the house was built, the inspector who inspected this property didn't inspect that correctly. It was wrong from the very beginning. It wasn't that the actual system failed. So we made this assumption. So it could be considered a failure because of the fact that then it fell out of contract. And because we couldn't come to agreement on who was going to cover the cost for replacing the septic system. So that could be considered a failure. But what we're doing is we're replacing the septic system, obviously, and we're now marketing the property as a completely renovated property with a brand new septic system. And most properties in that area have old septic systems. So even if they pass the septic test, then eventually they're going to fail. So that's what we try to leverage when we talk to prospective buyers, saying, you know, this is a brand new septic system. All the other comparable homes in this area that you're looking at are not going to have brand new septic systems. So you will, during your lifetime of owning the property, the likelihood of you needing to replace this septic system versus if you bought a comparable property, because in this area they're all in septic, then obviously you have a higher risk of having to replace your septic system, and it's already taken care of for you. So you really just need to kind of look at it something a different way, and then be able to exploit that as an opportunity as opposed to it being just a failure.
Love it. What is the book you've recommended or gifted the most in the last year?
Rich Dad, Poor Dad. Everyone probably says that, and I know it's like a very generic answer, but that book can change someone's life. There's a lot of books that can, but that probably has the highest rate of changing someone's life. So I gift that the most.
Rich Dad, Poor Dad, Robert Kiyosaki. All right,
Yep.
Give me a digital or mobile resource you recommend for your business.
We recently started using Calendly and to do all of our scheduling, and I cannot believe how much time that has saved me already. And it's only been a week and a half that we were using it. I thought it was going to be really challenging to set up because I have multiple email accounts and calendars, but it integrates with everything, and I don't have to go back and forth, and I put it on someone else to schedule with me any sort of appointment based on my availability that I set up. It's so easy. I highly recommend everyone get it.
Calendly is great. We've been using it for probably a year or more than that, and absolutely love it. So great resource there. What is a daily habit that helps you stay focused on your goals?
I recently purchased Brandon Turner's book called Intention. It's his daily journal. And I'm not 100% good at sticking with it. But my thing is, no matter if I don't do it one day, I just come back and do it the next day. It's just a matter of really getting into a habit. It takes a little bit of time for me to get in the habit of journaling. I've done it before and then I went away from it. So it's challenging for me, but challenging in a good way. And what I like the most about Intention, and this is what I would highly recommend for someone, is I journal, and then at the end of the day, you journal at the end of the day to talk about productivity. I am most productive when I journal. How surprising is that? That shouldn't be surprising, and that should encourage me more to journal. So if you were like me, you should try it and then look across multiple days. What days are you the most productive in your day and moving the needle? It's probably the days you're journaling. So
there you go. Gotta document it. What are you curious about right now?
What am I curious about right now? I am curious about some different markets that we're looking into, and really understanding the nuances. We're looking into different markets than the normal markets that we've looked into historically. So that is probably, with respect to multifamily, that is what I'm most curious about.
All right, give me the best place to grab a bite in your city.
Hip City Veg. I love that.
Veg.
I'm vegan, so it is a vegan restaurant. It has amazing food for vegans and non-vegans. But I highly recommend Hip City Veg. It's very cool.
And where is this located?
They have multiple locations, but there's one close to my house in Villanova, Pennsylvania, by Villanova University. But I think they originated out of Philadelphia.
Got it. Awesome. We'll definitely make sure we check that out next time we're in the area. So we've talked about a lot of different things. I appreciate you talking about partnerships, working with your dad, working with your husband, construction management, and how important it is for multifamily investors, especially if you're a syndicator, and really just giving us a lot of tips to understand how to thrive and how to drive our business. One other thing that you're involved in is InvestHer. Can you talk a little bit about the InvestHer platform and kind of what you're working on there?
Absolutely. So Liz and Andressa are the co-founders of InvestHer, and they started it a little over a year ago. I think it's about a year and a half ago. And it is an incredible resource for women investors in all different facets of real estate. It's to provide support for women who feel intimidated or just uncomfortable getting information elsewhere at meetups. Oftentimes, us women, and I can say even to today, to be honest with you, I will attend real estate meetups and I'm the only woman in the room. And that is really unfortunate because everyone in that room has probably a sister, a spouse, a mother, an aunt, someone they could be bringing along with them in the journey. Unfortunately, if you look at the pay scale between women and men, I believe currently it's 79 cents to the dollar on what women are making. And when you take that one step further and realize that men are more likely to invest, they're more educated in investing, they're more confident in investing, that in terms of wealth over a lifetime gets extrapolated even further, the difference, because of the difference starting from the baseline and then the tools that men have at their fingertips versus women. InvestHer is to provide opportunities across the country. There's even some locations in Canada where we have meetup groups. We bring in different speakers. My meetup location was the first location outside of the original location outside of Philadelphia. So we're in the suburbs of Philadelphia, and we bring in the most incredible, talented women that, I'm blown away by what these women are doing. And they're very comparable to men speakers on the same topic, but it's interesting because women do not get asked to speak as much as men do, which we need to change that. We all are a part of that change, especially being diverse too. Like a lot of people that are getting women to speak, there are all different types of women that are in real estate and they are not being recognized, whether it's different races, different ages, different sexual orientation, it doesn't matter. They all have really incredible things to say. What's interesting is that our meetup location, I have men attend every single meeting, and I have repeat men come every meeting. And at the end of the meeting, they always come up to me and they say, Ashley, I cannot believe this still is the best meetup that I go to. The information at this meetup is incredible, and women are just, and I'm trying not to be sexist here, but the speakers that we've had, I'll just say it that way, the speakers that we have just seem to be very forthcoming with sharing information to help people. And the other meetups I've attended, it seems to be a lot of posturing and a lot of unit count comparison and things of that nature. And that really doesn't help anyone. So I'm an abundance type personality. I think you can tell from this podcast, I've given away everything that I'm doing, and I will continue to give away everything that I'm doing because we all grow stronger together. And that's my mindset. So this InvestHer community has that same mindset. That is why I am a huge advocate for this community, and I'm really excited to see where we're taking this next. Liz and Andressa have done an incredible job laying the groundwork, and what they have on the horizon, I encourage all women to sign up to this and to bring on other women that they know. For all men listening, please educate women around you to also be in investing. And you can obviously utilize this asset, this resource, because it's free. There's a Facebook page. There's a website. They have a podcast. So really there's a lot of good information through that platform.
InvestHer, it's a great platform. We've had the pleasure of talking to Liz, not so much on the podcast, but I've known Liz and her husband Matt and Liz both. They spoke at our Midwest Summit over the summer, and great people. And to your point, something we recognize too, we always try to use our stage and our platform wherever we can to share the voices, because sometimes people just need to see someone like them doing it. I think that very often you see a very familiar face that is representing real estate investing or multifamily investing or syndication. And it's not until you see someone who looks like you that you can start to internalize the things or understand the struggles. It's not just the physical attributes, but being a parent and understanding how do you juggle being a parent while working a full-time job and trying to invest on the side, right? So there's different things like that where it really helps to have people who are walking in your shoes, going through the same kind of challenges. And the fact that it is based on education is definitely a great thing to check out. So we'll certainly make sure we put a link to that in the show notes. Investor Ashley, you came on the show, you gave a lot of great information. Love all the tips on construction management and how we all can do a better job of just overseeing the various projects that we have, finding those efficiencies to cut those projects down from 9 months to 9.5 weeks, which I think is incredible. But just trying to find ways to be more efficient and really take ownership of these projects. So Ashley, thank you again for coming on Target Market Insights, and we look forward to talking to you again soon.
Thank you for having me. And for anyone who wants to learn more or follow my path, you can follow at Bad Ash Investor. That's on Instagram and on Facebook. And I have a website, badashinvestor.com, and that links to all of my companies that I was just talking about. So if anyone needs to get in touch with me, I'm happy to help through those platforms.
Thank you, Ashley. Take care.
Thank you.